Hello everyone, I'm Jerry D'Ambrosio, Manager of Educational Content with VectorVest, and it's my pleasure to bring to you tonight's special presentation. Supply and demand as defined by Oxford Languages is the amount of a commodity, product, or service available and the desire of buyers for it, considered as factors regulating its price. And we hear a lot about supply and demand when it comes to commodities, oil for example. If the demand for oil is high, the price will go up. If there is an overabundance or an oversupply of oil, the price will fall. Same principles apply to the stock market. If demand for shares of a given stock is deemed strong enough, traders will look to buy, expecting the price to move higher. And when supply is deemed strong enough, traders will look to sell or take a short position because they expect price to fall. So tonight I'm going to teach you how to take advantage of these really important price zones that traders look for. So here we're looking in the VectorVest 7 real-time premium program. We're looking at APA, and all I have right now is the price of the stock at the top and volume at the bottom. So to add support and resistance to the chart, all I have to do is come up to the upper right, click on Add Parameter, go to Technical Analysis. Now everybody has all of these technical indicators available to be added to a chart. If you have any of our VectorVest 7 platforms, our end-of-day data, intraday data, or real-time, doesn't matter the country either, you have these technical analysis indicators available to be added. I'll show you a little later how you can search for these types of indicators, and particularly support and resistance. That's the one we're talking about today. Now with that capability, you do need our ProTrader add-on module. But to simply add support and resistance to the chart, I'll come down here at the bottom, click on support and resistance, and make sure I check the box and add it to my chart. And what that does, that adds the most significant support and resistance zones to the chart. And one of the great things about the support and resistance indicator here is it's very flexible. So notice over this 1 year time period, let me pull this out a little bit further. There are 2 support lines that were found and 1 resistance line that was found. Now the resistance line, you could see this very faint line up at the top. That is the most recent resistance. Price has just pulled off of that level where sellers deemed supply strong enough to push the price lower. This level here at about 34 and change is the support level currently below price, and this level here at 24.08 is the support level right below. What I'm seeing here is a couple of other support levels that aren't put on this chart, and I'm going to use a horizontal line. I don't know about you guys, but I see support right about here at about 16 and change, and I see another support level right in this area at about 30 and change. Well, why aren't the lines added on the chart? If I right click on the support and resistance indicator and go to change settings, it's a very flexible indicator because we can look at more data, less data. We can change or modify the size of the reversals off of those support and resistance zones, the size of the support and resistance zones themselves, and we can also choose the number of lines to display. So we're just showing right now the 2 closest matching lines. If I select Show All Matching Lines and change the size of the support and resistance zone to average, you see what that did? I'm going to click OK. It finds that zone there and that zone there that just weren't displayed using the default settings. So if you think you see another support or resistance zone on the chart that's not on there, just modify the support and resistance settings and you'll be able to find them. So I'm going to uncheck or get rid of my horizontal lines there. And first we'll just zoom into this area here. So February of 2021 to November of 2021, you can see the stock price kind of trading in a channel. February, March, stock rallied, it retreated. It stopped right in this 1622 zone. The stock began to bounce off of that level and eventually approached the most recent high here at about 2370. So that is a psychological level where traders see a pause or a hesitation in the previous trend and expect price to fall from that level, and that's what they're betting on. So once price reached that 2370 zone here right in the beginning of June, you saw that selling pressure overcame buying pressure. Traders felt that supply at that level was strong enough to resist the price of the stock from rising any further. So it retraced from that zone. As price falls, what we could expect and what traders look for is a pause or a hesitation at the most previous swing low. And you could see price fell, landed right in that 1622 zone again. So the bulls at this point are looking for value. They deem demand at that level strong enough to support the stock price from falling any further. So they begin to pick up shares again at what they perceive as value, and the stock rises. Now, it doesn't immediately come back to retest that resistance level. Pulls back a little bit, and then right here, it does. Right in the beginning of August, you get another retest of that 1622 support zone. So that is another very critical level. There is some hesitation in that zone. Notice this candle here and that candle here right at support. That is an inverted hammer. That is a bullish candlestick reversal signal, and this is called a black spinning top. That is similar to a doji in that it does represent indecision. So when you start to see these bullish candlestick reversal signals or candles of indecision occurring at a historical level of high demand, that is when you want to start thinking about picking up shares again. Now, what I really like to see is a retracement off of that zone. The really, really smart money, they're willing to take positions right at support. I don't mind waiting another day or two until we truly see price retrace from that support level and the bulls win, right? Because at support, it's a battle between the buyers and the sellers. Sellers want to push the price lower. Buyers want to hold that price and begin to move higher. I like to see who wins first, and then I'll hop on board. So you can see August 23rd, nice retracement off of that support level. There's your buying opportunity. Price rallies now pretty strongly, and where does it stop again? It stops right at that level where traders deemed supply strong enough to resist the price from moving higher. It's a very psychological level. You could see strong volume at that time as well. So we got a retest of resistance again, and then a slight retracement, and then a pretty immediate retest once again. And what happens here? October 8th, the price of the stock breaks out of that resistance level. Buyers win. So at that resistance zone, sellers want to push the price lower. There has been selling pressure at that level a number of times prior. So you do get another quick retracement off of that level. But right after that quick retracement, buyers came in and pushed the price higher. Breakout through resistance is bullish. Retracement off of support is bullish. A retracement off of resistance is bearish. And a breakdown below support is bearish. So two situations for each zone. So let's step forward and kind of see the psychology here of the trader as we move away from that resistance zone. By the way, when you break out above resistance, that resistance level becomes support. And a lot of times what you'll see is a retest of that zone eventually. So price continued to move higher. Nice channel breakout. We hit a high here of 31.14 on November 8th. Price retreated. Kind of touched that zone again. Price retreated. Hasn't come all the way back to 23.70 yet. But now it does. So we eventually get a retest of this support level. That, folks, is called a hammer. It's a bullish candlestick reversal pattern, and in fact, the day before was an inverted hammer. So at a level now, remember, what is support? The support level is a level where traders believe they have found value and look to take long positions. And they started to do that right at that level. You could see the long upper wick here on December 14th. That means that the buyers were able to push the stock price all the way to 25.71. They weren't able to sustain it. Price closed at 24.94. The next day, the long lower wick that really touched that support zone, that means that the sellers were able to push the price lower but weren't able to sustain it, and then price rallied to just off of the high of the day. So if we move forward the next day, what happens? All right, we really didn't get that retracement just yet. We got another retest of that zone. landed right in the zone again, and there you go. There's your retest, and there's your retracement on high volume, by the way, off of that support zone. So what should we expect price to do once it reaches, now that we've retraced from that support zone, 2370, what should we expect price to do now at that 3055 level? We should expect a pause or a hesitation at that level. All right, we didn't quite make it. You can see we're starting to pull back a little bit. So maybe we're going to come back to retest that support level again. But we don't. We get there. We get to that 3555 zone, the same level where price hesitated back in the beginning of November. That candlestick formation, it's not a coincidence, by the way, that at these turning points, at these support and resistance levels, that you see these bullish and bearish candlestick reversal patterns. It's not a coincidence that most times that's what you're going to see. It's a very psychological level where sentiment shifts. So on January 5th, you got a bearish engulfing. Didn't get follow through. We're kind of hanging around that resistance zone, but you know what? Price eventually breaks through that zone again. So here is your hesitation or pause, which traders are expecting at that level. One of two things can happen, right? Price can retrace off of that resistance level and move lower, or buying pressure can overcome selling pressure and you get your breakout. And that's what happened on January 11th. Continue to move forward. Price continues to break out, reaches a high here of 34 and change. We get the immediate now retest of support. Remember, when price breaks above resistance, it becomes support. As price moves away from resistance, you're likely going to get at some point a retest of that support zone, and we did. We got that. We got the retest. Now you're at support. One of two things can happen. Price can break down through that support level and likely continue to fall until the next support level, or successfully retrace from it. So what happens here? It successfully retraced from it. You kind of had a lower open here, but a really strong close right at that zone again. Price broke out through. Where did it hesitate again? Now in that new resistance zone of 3460. Little pause. Not really a true breakout. Still a little pause, right? There's hesitation in that zone. And it's not an exact price point. It's a zone. And when I hover my mouse over those support and resistance levels, you can see how it creates those zones. So a lot of congestion in that 3460 zone. What's going to happen? All right, we got a retest now. We got a retest of 3055. So we're really moving sideways. Buyers at that level do deem demand strong enough, so they're going to look to pick up shares, and they actually began to do that on February 15th. Now we get the breakout finally. Another mini retest of that 3055 zone. Approach resistance again, finally broke out through it. So if you're a buyer, you can do one of two things or both, right? You can buy off of support, and if that support retracement is successful and you are profitable and price eventually gets to the next resistance level and then breaks out through it, you can add to your long position. It looks like we're almost at the hard right edge here. Price breaks out through resistance. Came back down to retest support. See the long lower wick? You guys see that behavior on that day? So let me go through exactly what I mean by behavior. So here, price opens at 35.57, hits a low of 34.79, which is right in that zone, almost to the penny. And I said earlier that the smart money gets in right at that zone, right at that level, and that's what happened. The price again opened at 35.57, moved to a low of 34.79, 34.80, and the smart money said, this is it, this is the low, and they began to pick up shares, and you could see strong close on that day, right? Price closed near the high of the session. And we retraced from it beautifully, and that is the hard right edge here of APA. New little mini resistance right at the high of 43.87. So what can we expect to happen? I would expect at some point price to fall back to this 34.60 level. No idea when that would happen. But what have we seen happen over and over and over again? Price moves higher, pulls back to a zone where demand previously was deemed strong enough to support the price from falling any further than that. And trading using support and resistance is really one of the oldest technical analysis tools out there. And this really is the ultimate crowd mentality indicator. When everybody else is looking at the same levels, it becomes a self-fulfilling prophecy, right? You're expecting a certain outcome at those levels. Either price is going to retrace from it or it's going to break down below it. Now, I mentioned earlier that you can add support and resistance to any chart. I'm going to go into our Unisearch tool and just show you real quick that our Pro Trader module here allows us to search for stocks that are breaking resistance if you're bullish, breaking support if you're bearish. This is my account, by the way, so there's a lot of crazy searches in here that I've put in here over the years. Don't mind them. You all have the retracing resistance and breaking support searches in your Pro Trader folder if you do have Pro Trader. So what I want to leave you with is a new course that we're offering called Mastering Moving Averages. Did you know that you can use moving averages as support and resistance? We'll teach you all about that in this course. Now, the regular price for the course is $595. The early bird rate is available at $395. Just go to VectorVest.com/MA to register. Some bonus offers here. What you'll get: 6 live mastery support sessions. You'll get access for 70 days to our VectorVest Premium Real-Time if you don't already have it. That includes Pro Trader for the technical searches and the Auto Timer, which adds market timing to a portfolio and a backtest. Here are the 10 lessons. We'll start off with just the VectorVest system, just some key principles, including how to add those moving averages to the graphs and the searches, understanding moving averages, trading with a single moving average, trading with golden crossovers, moving averages as support and resistance. One of my favorite techniques, the EMA squeeze trading strategy, the Guppy system, which is a multiple moving average trading system. Dr. Barbara Starr's Surfing the Reversal Waves. This is a great one as well. We'll talk about the Midas Touch for both swing and long-term trading. And then a bonus module called High-Low Moving Average Bands. There will be case studies and homework assignments included with every lesson. There are the dates for the live mastery classes. We begin in about 3 weeks. Those classes start at 2 p.m. Eastern Time. They will be recorded. They'll be uploaded to the VectorVest University. This is an email by Warren G. He sent Stan Heller an email after one of our last courses. Stan and I will both be the instructors for this course, by the way. He said, after taking the MMA course, I am now able to better determine entry and exit points. My win-loss ratio following my old plan resulted in 51% wins with a very little monetary gains. What he did was he went back to his old plan and reviewed all the trades and figured out that if he would have followed the 20-day MA strategy, he would have had 75% winners and produced his largest portfolio gain. Using the EMA squeeze, 84% winners with the second largest portfolio gain. Golden crossover, 64% winners with the smallest of 3 of the portfolio gains. He said, I would gladly have taken half of the portfolio gains in any of these strategies. So go to that website, VectorVest.com/MA, or call our 188 number. If you have any questions, shoot Stan or I an email. We'll be more than happy to help you. Have a great weekend, everybody. See everybody soon.
Yeah.